It's the last edition of Business Morning for the week. Welcome to the program. I'm Chimeze Obi Iwagu. The cashless policy of the Central Bank of Nigeria came into full implementation on April 1 this year. The aim was to reduce the amount of physical cash in circulation, thereby encouraging the use of electronic platforms for settlement or payment for goods and services. And with the advent of COVID-19, efficient implementation of the cashless policy has become pertinent as more enterprises migrate to online transactions for contactless banking. But how well are the banks meeting up with this responsibility amid a rising rate of cyber attacks? Joining me to have this conversation is the Executive Chairman of XL Africa Group, Mr. Charles Nwodo. I also have in the studio the President of Nigeria Internet Group, Mr. Destiny Amana, and of course joining us via Skype is the Chairman of the Committee of Chief Information Security Officers, Mr. Abumere Igboa. Thank you very much, gentlemen, for joining us on the program.
Thank you.
Thank you.
Right, let me start with you now, Mr. Nwodo. What's your assessment of the cashless policy so far?
Thank you very much for having me on the program, and it's a great pleasure to discuss this all-important subject. The cashless policy of the central bank, like you rightly pointed out in your intro, was intended to deal with a very serious and growing problem in the economy, which was the cost and the risk of cash transactions, and the consequential impacts on bank customers. Because typically when the banks pay so much, spend so much, to manage the cash value chain, somebody has to, pick up the cost. So they pass on the cost to the customers. So the central bank actually initiated this move so as to encourage the banks to drive down their costs, by migrating to other channels, as well as improving the efficiency in the handling of the cash, and hopefully generate a more favorable banking environment that will attract more bank customers. In other words, financial inclusion, expand the basket of bankable Nigerians. So there's a whole lot of intentions, noble intentions that the central bank, had in mind in conceptualizing this policy. But whether those intentions have been achieved and to what extent they have been achieved is up in the air. And I think that's what we're going to interrogate at this session.
Okay, let me come to you, Mr. Amana. Internet protocol security for online transactions are meant to enhance financial, inclusion as an alternative payment channel. What has changed in this regard? Has this really worked?
Well, Nigerians are very well known abroad, unfortunately, for fraud, especially when it comes to internet fraud. I mean, we even joke about the fact that we have something called 419, and it's part of our lingo because of the special article 419 in our legal code. But the banks know this already, and like any other person that has to prove that they are worthy of your trust, they have gone above and beyond what they needed to accomplish to earn that trust. That is why the inclusion, the financial inclusion right now for a lot of people with the cashless policy has been quite successful. In fact, most people I know use their phones for most of their transactions. When you go to most of these shops that the POS is not working, you do a transfer from your phone. Security-wise, the banks keep updating their software, and now most transactions require two-factor authentication. That's when you start the transaction and an SMS comes to verify that you actually did that transaction. Go to the West, they don't do that yet. In fact, in America, they've only just started using PIN and chip with their debit cards.
So in other words, are you saying that it's been efficient since implementation? Because a lot of people...
There's still work to be done, but I take my hat off to the fintech in Nigeria. We're going places. We're going places.
Okay, let me come to you, Mr. Igboa. What's your take on this conversation? What's the role of chief information security officers in Nigeria's cashless policy, and how successful has this effort been across the banking industry?
All right. Thank you and good morning. All right. So the role for the Committee of Chief Information Security Officers, basically, the committee was actually set up under the guidance of the Central Bank of Nigeria, and we're meant to provide risk-based advisory services to the financial industry. Basically, we've been able to work collaboratively. We meet on a regular basis, monthly. We even just completed a cybersecurity conference just last month. And the whole intention is to kind of deliberate on ways to address and tackle the issues that we see that are predominant amongst the financial industry, and also affects the stability of the and security of the financial ecosystem. So there's a lot of inputs that goes back to the central bank, and also the bankers committee, where some of these issues are well deliberated and assigned as responsibilities to the committee to deliver and help better improve awareness and the confidence of the citizens on the financial ecosystem. Yeah.
Now, Mr. Wodo, you are one of the licensed currency processing companies in the country. What are the constraints in the cashless policy implementation that needs to be fixed, for the policy to succeed?
Thank you very much. I think first of all is to deconstruct the myth that somehow the country and the world is going cashless. I think there's a whole widespread assumption that that is the case. Unfortunately, that is what it is. It's a myth because, in fact, statistics suggest the exact opposite. Cash is increasing. Cash in circulation in Nigeria is increasing. Cash in circulation in even the advanced economies. The United States is increasing by 5% year on year. Cash in circulation in the European Union, as I was explaining to my friend here, is increasing even faster by a factor of about 6.5% year on year. In Nigeria, it is even more. And so the constraint we've had is this mindset that somehow cash is no longer a problem. But it is a problem because every day we are supposed to be an intermediary agent in the cash value chain between the central bank and the banks. Like I explained earlier, the whole concept of even having players like ourselves was to assist the banks, divest from activities like cash handling and the costs and the risks inherent in those activities, especially given that they were non-core. They are really non-core to banking activities. Banks are set up to lend money, to collect deposits, not to process cash. And because banks find this activity non-core to them, they are not really regulated, responsible to the regulators as far as those are concerned. So they don't consider it primary, if you like, to their day-to-day activities. And so they focus attention on activities beside this. And what is happening now is that you have a near stalemate in the sense that we, the licensed operators, do not have access, do not receive the patronage of the banks in line with the central bank guidelines. And yet the banks are, flouting the guidelines of the central bank by, essentially providing these services on their own, and the system is paying the price in the form of unfit notes, in the form of ATM, automated teller machines that are inadequate for the population of Nigeria. The target of CBN, for example, was by this year to have about 93,000 ATMs nationwide.
But we just have like about 22,000?
About 22,000. And people don't understand that the reason is because the main raw material for ATM is cash. And you have to have ATM fit cash in order for the ATM to work.
Now, we're talking about cashless, and you want to encourage Nigerians to go cashless. But then, what discourages every average customer like myself is where you have dispense errors, and you don't even have to get your money back. I mean, that's a discouragement. How do we deal, with this? This should have been a bygone for now.
It is, but to be fair to the central bank, this is a phenomenon that exists in every dispensation, including the so-called advanced countries. So, but again, the issue is let the entities that have the competence and can deploy the resources and the expertise to manage these things, be responsible for doing.
So are you saying that the banks should mind the business of lending?
Correct.
And
then outsource these services to competent entities, because this is not rocket science. There's technology for monitoring ATMs. There's technology for ensuring that
But we have some fintech companies attached to this bank that work with these banks.
Yes. But the fintechs are minor changes in the value in the entire cash value chain. Unfortunately, like I said, the key players are the providers of cash, and those providers of cash are ourselves. Okay, there is technology, and once that missing element, which is providing cash at the right fitness level, providing cash at the right time through monitoring and proactive, monitoring of the ATMs and forecasting. Okay, and then making infrastructure available, at the locations, the key locations where, like power, like security, etc., you will be able to reduce the burden on banks, because the banks are asking themselves, how much do I even get out of this ATM? Why should I spend so much money?
All right, Mr. Wodo, just
so
hold your thoughts there.
Yes.
Mr. Manu, now we've seen the outbreak of COVID-19, and since the advent of this virus, we've seen the migration of more, retail companies going online. A lot of people do their businesses online, you do your transaction, online. How much do, merchants know about the risks that have to, go with e-commerce, space, and how can we really mitigate that? Because that's another challenge when you talk about going cashless.
It's very interesting you should bring that up, actually, because, as you said, I'm the president of the Nigeria Internet Group. It's an advocacy group created to educate Nigerians about, first of all, the internet, second of all, how to use the internet profitably and safely, and thirdly, to make sure that the name of Nigeria on the internet is seen as a positive influence, as opposed to all the negative influence that we have actually garnered in the past. Now, your question about COVID, sometimes I look back and I go, wow, thank God for COVID, because it has opened the eyes of the average Nigerian. I remember 5-10 years ago going to people and saying, look, you don't have a website. Your customers are not just local VI or mainland customers. What if there is someone in satellite town that wants to order food from you? They've never tasted your particular dish, because he's not interested in those customers. He only wants his local customers. Now with COVID, people who didn't even have websites are now calling and saying, hey, that proposal you gave like 5-6 years ago, how far? I need to get online, because no one is coming. No one wants to take the risk. Now they've started taking those moves to get themselves online, but they're doing it with ignorance. There isn't a body that manages web designers, people who, because you go under the bridge, you see a sign that says website for 50,000 naira. You immediately pay because you need the website right now, and your domain name isn't even registered. You're burnt. You're thinking, how am I going to go forward? That's what we're here for, Nigeria Internet Group. We have a database of all the web designers. We have a database of developers. We monitor what people do on behalf of their customers, so that if you feel that you've been hurt in any way, you can report them to us. We can blacklist them on the internet. It doesn't mean we'll stop them from working, but the internet is such that just 2 days ago, I was on the way to a funeral. I had a small accident. The guy I hit, we came out, we spoke about it, and I said, look, here's my phone number. I'm late for this funeral. Call me with the cost and all. He called me that evening. I sent him the money yesterday morning. Only for this afternoon, someone telling me that he's already posted on Facebook the story and he's hailed me. I'm like, oh my goodness. The internet has that much power.
Absolutely.
Most people don't know. Now, security-wise, it starts even from the use of our phones. Most people that buy smartphones don't know that even though they've put their facial recognition, the security lock on the phone, they haven't secured their SIM card. If your phone is stolen, you can throw away your 200,000 naira phone and use your SIM card into a Balasa phone and send GTB 737 and it says, oh, I know you. Your balance is... and your money is gone. And it's just because of the SIM card. You see, ignorance is not an advantage here. Most people need to do research, find out, ask questions. They will learn. That's the only way you're gonna overcome it.
Okay, Mr. Imora, I'm sure you're listening. Global cyber security company Kaspersky, I guess I pronounced that company's name correct, Kaspersky. Yes, it released a report that shows over 2 million phishing attacks were recorded in Africa in the second quarter of 2020, with Nigeria having about 300,000 of these attacks. What do information security officers like you make of these revelations?
All right, thank you. So I think basically the information was expected, considering the impact the COVID-19 pandemic situation brought to our shores. So basically, people had to move. There was a lot of businesses had to move and adopt more digital platforms in conducting business. Policies and standards were not fully aligned or matured to handle the response to the COVID-19 pandemic situation. So a lot of companies did struggle, and that created a loophole or a vacuum for the attackers or hackers to actually exploit a lot of employees. So yeah, phishing attacks have been a thing in the past, but just recently that heightened because businesses have moved to had increased their use of more digital related systems. But I think what the CISOs had done in their various institutions was to ramp up their security systems by adopting cloud-based controls to be able to handle some of these challenges. Leveraging your traditional control systems was not enough anymore, considering the volumes that we started to see within the shores of our country. And we also did ramp up a lot on awareness, ensuring that employees clearly understood and took personal responsibility in protecting the information assets of the various institutions. So there was a lot of awareness campaigns that happened. We also did ensure that we could also measure the level of maturity in terms of those programs to determine that they were quite effective in managing the situation, and they were quite aligned with the strategy and objectives of the organization. So those were a few initiatives that were carried out by
Mr. Mana, what can you say about the Kaspersky Reports? That name is quite tongue-twisted. Kaspersky.
Very good, thank you. The Kaspersky Report, the way I see it, it's just the tip of the iceberg. It has exposed a little bit of what is really happening. There's a lot more going on than what that report says. Just like, you know, the COVID reports that we see every day, right? Even if you doctored those numbers, you can't hide the amount of bodies that will start appearing if people were dying the way they were dying in the West, The Kaspersky Report is a red flag for all of us.
Okay.
We need to actually start.
All right, just hold your thoughts there. Let's take a quick break. We'll take a quick break, and when we come back, we'll continue with this conversation. Just stay with us. Welcome back. Thank you for staying tuned. Well, we're still talking about the cashless policy of the central bank. And of course, I still have the gentleman here discussing this particular issue. Thank you very much, gentlemen, for sticking on.
Thank you.
All right, Mr. Wodo, let me start with you here. So one of the roles of cash in transit operators in the country is the security of fund. But lately, we have seen some kind of increase in cases of bank fraud in the bank. What are the strategies to adopt to really minimize this?
Thank you very much. The increase is predictable. Again, this was part of what CBN sought to address by organizing a currency operations sector and even creating a department of currency operations. We used to have branch and currency operations. CBN, in its own wisdom, came out and created a standalone currency operations department to draw attention to the importance of currency activities as central to banking, especially commercial banking. But allied to this initiative is the push to get banks to outsource some of these activities to companies. There are about 9 companies that are licensed to distribute cash nationwide. A lot of banks still insist on distributing their own cash, and they don't comply with any standards. Most of the attacks you hear about are attacks against bank-operated distribution businesses, because, like I keep saying, banks are banks. They are not designed for this kind of operation. So that is expected. That is something that is totally avoidable if only the banks can even comply with guidelines that the CBN itself has designed, even placing fines and imposing fines on them for contravening those guidelines. But the banks still insist on doing that. Even the processing of cash, which is also one of the things we are licensed, some banks still do that. A lot of that creates problems, this kind of problems you are talking about, bank robberies. That's why armed robbers attack bank branches, because branches are really not supposed to be like fortresses where cash is kept. Our own facilities are the fortresses that are supposed to keep cash. So if an armed robber were to attack our place, then they will be coming for a war, because they will be prepared to come. But if you go to a bank branch where you just have 1 or 2 security people, the place is exposed, because the banks, again, flout CBN guidelines in terms of keeping cash, overnight cash, and processing this cash themselves. So it is all mixed up in the kind of situation that we find ourselves in.
Now, talking about this currency processing, how would you want this rule better implemented?
Like I said, do that which you have the expertise to do. That's all we say. The banks are not our banks. We are licensed by CBN to provide these services. And so we should do that, and the banks should focus on their own core businesses. And the beneficiaries of this will be the customers, the unbanked and the banked population, and the regulators. And why this is important is that, this is a process. Nigeria is the dominant economy in this region. We've just signed the Africa Trade Agreement, okay? So we know that Naira is traded across the sub-region. If you go to Togo, Niger, Ghana, everywhere, people actually, Naira is the currency of choice, okay? Next to the CFA franc. So we need to pay attention to the circulation and security of our currency. It's very, very important. The Americans, people don't know that the reason the Americans, created the Secret Service actually was to protect the US dollar, because they understand that the dollar is the world currency. So they don't joke with every single dollar is accounted for. Now, In our own case, I think it's not just operational issues that we should be talking about in terms of the cash. There is even the issue of security, national security. When you have an industrial, a fraud and criminal industrial complex that is growing in complexity and sophistication, we should be mindful about the safety and the operational efficiency that our currency goes through, for the benefit of the overall economy.
Okay, talking about security there, let me come to you, Mr. Igbowa. Lately, cyber attacks have been, on the rise as a result of the lockdown, which led to the job losses and pay cuts. How have your members been managing this trend?
Oh, okay. Yeah, so I think the most important thing is what is now valuable to these fraudsters or attackers. We've seen a change in the trend. I think previously what would happen is they would either try to retrieve the funds through a Western Union attempt. Means they have to go physically to the branch, which exposes them to risk, and then they could actually get caught in that operation. But I think what has happened now is there's been a shift. The shift has moved to data and information as a result of the cashless policy. So now I can earn value, monetary value or financial value, without having to transfer physical cash from one individual to the next. I can do that through an electronic system. So now the attackers are also aware of that they can sit down in their home, compromise citizen information or data, and leverage that to carry out illicit transfer of money or deprive these citizens from their hard-earned funds. So that shift from physical currency to data and electronic currency, it's also a mind shift that the public also needs to be clear and understand the value of information. So I think one of the we've seen this trend, and we've been working closely with some industry stakeholders, speaking to NISDA, which is the Nigeria Information Technology Development Agency, who drafted the Nigeria Data Privacy Regulations to support the protection of information for various data subjects. So we've also seen that focus has grown with the recent draft bill for data protection. And I think it's going to a position where we as individuals and citizens of the country need to take personal responsibility in protecting our information, because that is now the part of the gateway to gaining access to our financial information and financial currency. So we've seen a couple of trends as a result of that, where social media is also being adopted to compromise sensitive information of various citizens. So they are either lured into prizes and asked to provide those information to be able to retrieve those prizes. So that kind of creates an avenue to be able to compromise people and the public, and to be able to leverage that information in carrying out practices around cyber breaches. But I think on the other end, where you talk about the impact from a job loss or job cut or pay cut perspective, I can't speak clearly for every financial institution, but I can say that experience has not happened for where I work and where I play my roles and responsibilities today. we've not had to take any pay cut to be able to ensure that the business continues to strive. So I can't speak for everybody, so I would just say that I've not had that experience, so I can't really provide clarity on that one.
Okay, now, Mr. Amana, corporate organizations today, adopt ISO certification for quality assurance and transaction security. So what security solutions are available for average retail firm with online presence today?
Okay, thank you for asking that question. That's a good way to start off with e-business. If you know how to secure your website, your customers will have trust, knowing that when they use their debit cards on your website, it's safe. The first line of attack for any person when using your website is to find out if you have a padlock on the address bar. That's a security certificate, SSL. Now, when you are creating a site that is going to request financial information or even personal information, it's always advisable to have a padlock on your website. Now, actually, what Google has done is that they know a secure website is more important than a non-secure website. So your search engine rankings will be affected by the amount of security you have on your site. That's the first thing most people should look out for. Sometime next week, the Nigerian Internet Group is actually having a seminar on e-commerce and e-business post-COVID. If anyone's interested, visit our website, nig.org.ng, and register for that. That will give you a lot more information. Because the amount of information I have to give, we don't have that much time to give it here. I just gave you a little taster with the padlock. But most people don't even look out for the padlock on a banking website. So if you have a phishing attack against you, to get the padlock on your website, you have to verify you are who you are. So if you don't have the padlock, that means that site is not a guaranteed site. So if you have a phishing attack against you and they say, click this link, your BVN has been locked down, your account has been closed, and you click it, and the website of the bank that you normally use shows up, and you now start putting your username and password, you're the only one to blame if you didn't look out to see if there was a padlock.
All right. So, Mr. Wodo, what are the needed currency processing infrastructure today? Do you see the ongoing installation of the 5G network helping to reduce the rate of technical glitches, across the alternative transaction channels?
Well, let me put it this way. Cash is king. Cash is still king. Okay? The world over, cash is still king. And the reason cash is king is basically because of some of the issues that my colleague has talked about. On the digital space and on the mobile payment platforms, it's easy to manipulate large amounts of value, So the impact of fraud on these platforms is huge. So that is one attraction why a lot of people, still retain cash as a form of payment. Now, another factor is that even in Nigeria, the cash payments account for like 3 times the value of digital and mobile payments in the last 5 years. So really, there's this mindset that cashless policy is sucking away cash. But the reality is that there's a huge volume of cash out there that is begging for policymakers and industry operators to pay greater attention to. Okay, there are standards for processing. There are fitness standards that the central bank has advised. In fact, they've publicized them. And recycling policies. There's something, banknote fitness standard that central bank has advised the industry. But you see, because, again, it is not the business of the banks. The experts are not the ones handling it. It is difficult to hold the banks consistently to account for it. Okay. It is, and then if you look at the fact that majority of Nigerians today are still largely unbanked. If you look at the figure of the number of BVN that you have, about 43 million, you compare that to the number of telephone subscribers you have, almost going to 200 million. You see that there is a gap in terms of the number of Nigerians that do not have bank accounts. And statistics show that 80% of people without bank accounts like to transact in cash. People who earn low salaries, 75% of them like to transact in cash. Most transactions of 5,000 naira or less, about 55% of them are transacted in cash. So we have a cash problem. The banks will do well for their own growth, their own expansion, their own financial inclusion drive to actually pay attention to the issue of cash. How do they manage it? What is it costing them to manage it? And how secure is that process in the entire value chain, end to end? So, luckily, some of us are acquiring capacity, okay, that will position us to handle these, services better and more efficiently on behalf of the entire banking industry and to satisfy the objective of the central bank in this regard. And hopefully, if these policies go through, I think we can have this kind of conversation, in a more favorable setting, about 12 to 24 months from now, So it is a problem. Cash is a problem. One last thing about COVID-19 I want to say is that there is this, again, another fear about handling cash. Cash being a vector or a transmitter, a transmission medium for COVID virus. But in fact, statistics show that the virus actually have a longer lifespan on plastics, which is what cards are made of. They can last for about 7 to 8 days on plastics. On cash, they can only stay like 3 days. So in the COVID environment, it's even safer to hold cash than to hold,
like seriously?
to hold cash. Oh yes, this is
I thought they
statistics.
said, this COVID can be transmitted through cash.
Yeah, but I'm saying that yes, it is true, but the lifespan on cash is shorter.
Okay.
So it will die faster than it will die on plastic. So while you hold your plastic, your card, you should. That's even what you should worry more about because it has it can last there for 8 days. Can transmit it.
Okay, I have one question I would want to ask Mr. Igbowa there. Well, yes, Mr. Igbowa, there's a belief that corporate insiders are behind some of these cyber attacks or fraud that we see in the banking sector. How do you react to that? And could it be true that the banks underreport the spate of cyber attacks across the country?
All right, thanks. All right, thank you. So we can't eliminate that position. Insider threats, it's one of the threat scenarios that we take into consideration when we continue to put together our cybersecurity strategies and also initiatives on how to mitigate cyber fraud related matters. We've seen scenarios where syndicates worked with internal staffs and collude with those staffs to defraud customers. So some of these issues actually do exist, and basically it's dealt based on the type of scenario that is involved. But like I said, the real challenge is how do we continue to create awareness? How do we continue to educate people so that they become much more aware of these challenges? They get to understand that they are being used or exploited because they don't end up having the larger chunk of the gains from such schemes, and they end up taking the fall for those issues when the investigations actually are concluded. So I think yes, it's a scenario that really exists, but the financial industry has taken that into its risk framework as one of the threats to look out for, and measures are being put in place across different institutions on how to monitor that unusual behavior So they look out for key things within their environment to determine those, or rather review such behaviors. They are of different kinds, and I really don't want to reveal so much information around the measures that have been taken to address them.
Mr. Igbo, well, I wish we have more time to really talk about this, because this is becoming very interesting. Anyway, but we just have to leave this conversation here, and we'll continue to, it's a discussion that is continuous. So we'll continue to talk about it. Thank you very much, gentlemen, for coming on the program.
Thank you.
I've been speaking with the Executive Chairman of Excel Africa Group, Mr. Charles Modo, and of course, the President of Nigeria Internet Group, Mr. Destiny Amana, and the Chairman of the Committee of Chief Information Security Officer, Mr. Abumere Igboa. Thank you, gentlemen, for coming on the program.
Thank you.
Thank you.
Yeah, thank you.
All right, we take a quick break now, and when we come back, we do an opening call to London, and then back here for the markets. To stay with us. And for updates from the streets of London, we have Simon now. Good morning, Simon. Well, starting off on the data front, Britain's national debt has hit £2 trillion for the first time. Give us a breakdown of this.
Yeah, morning, Chimmy. Yeah, it's an astonishing surge in debt, isn't it? Economists warned the situation would worsen also before it improves. It is the first time debt has been above 100% of gross domestic product, or GDP, since the 1960-1961 financial year. That's according to the Office for National Statistics. It's not really a surprise that the government was borrowing a lot of money, given the size of its efforts to support people hit by the pandemic. But interest rates are so low, which means the government is actually spending less on servicing its debts, so paying less interest on the money that it's borrowing than it had been forecast before the coronavirus crisis. The government has always borrowed money, of course, and was in debt before the pandemic, but it has now borrowed £150 billion since April as a result of the crisis and efforts to fight it. Rishi Sunak, the UK Chancellor, has described today's borrowing figures as a stark reminder that the government must return the public finances to a sustainable footing over time, and people are saying that he needs to make sure that the people have got jobs and the economy is in an okay position before the UK starts to pay back some of that debt, and that we don't go too fast too soon in terms of repaying the debt.
And two retail veterans are lining up to front rival £6.5 billion private equity bids for Asda. Now, the UK's third supermarket, Asda's US owner, Walmart, restarted talks on the sale of a stake in the supermarket chain in July. Tell us more about this new development.
Yeah, well, Asda is a sort of cheap supermarket retailer here in the UK. Familiar with the people will be familiar with the tagline, which is "That's Asda price." Its US owner, as you said, Walmart, restarted talks on the sale of a stake back in July, 15 months after the planned merger with Sainsbury's fell apart. So at one point, Sainsbury's and Asda were going to merge, but I think the competition watchdog decided that wasn't allowed, or at least it would be unfair advantage. It is understood a deal could be announced by the end of September now. Talks involving Lone Star and two other private equity firms, Apollo and TDR Capital, were paused in April after the coronavirus pandemic hit. TDR is now believed to have dropped out of the process. Walmart, which bought Asda in 1999, is expected to retain a minority stake in the supermarket under the deal, which could be concluded by the end of the year. While no price for Asda has been revealed, the chain, which has more than 600 stores and accounts for about 15% of the UK's grocery market, was valued at about £7 billion at the time of that planned merger with Sainsbury's. So it's understood that any kind of deal would be in that kind of region. And yeah, it'll be interesting to see what happens there, because Asda's a big department store here. A lot of people familiar with it. A lot of people shop there, and it's kind of sort of basic, quite cheap goods compared to the likes of, I guess, Sainsbury's, Waitrose and Marks and Spencer's. So yeah, we'll keep an eye on that deal.
Absolutely. Well, let's look at the UK nighttime economy. Nightclub owners have warned they face a looming financial Armageddon that could put 750,000 people in the struggling out of work within What has life been like for this industry in the UK since the COVID-19 lockdown?
Well, it's surely got to be the worst industry, really, in terms of the last few months. What can you do? Social distancing, nightclubs, those two things don't go together. I think what a lot of clubs have tried to do is maybe sort of rebrand themselves a little bit as more as a bar and a pub, and they've been opening and putting tables on nightclub floors. But yeah, more than half of members of the Nighttime Industries Association say they fear they will collapse within the next 2 months unless they receive increased government support to see them through the coronavirus crisis. That's according to a survey by the trade body. So that's how bad it is. This could cost 754,000 jobs, with nightclubs particularly hard hit, particularly in smaller towns due to ongoing uncertainty about when they will be allowed to reopen. Many venues have not been eligible either for any state support for businesses at risk of collapse due to COVID-19. Every week that passes, clubs are in a more precarious position. If there isn't an opening date, how can these places survive and plan? One owner said, "We believe there's a way back, but if the government needs us to shut, then they've got to help us." According to the NTIA survey of 360 businesses, more than 70% expect to make at least half of their workforce redundant by September, and 58% won't survive more than 2 months without financial assistance. So I think what we're seeing here is lots of different industries with different needs, and Rishi Sunak and the government have helped out the hospitality sector, in particular restaurants and pubs, over the last month with the Eat Out to Help Out scheme. And I think what the nighttime industry are saying is that they need specialist support, because it looks like this is going to be the last thing to open up in this lockdown crisis, is nightclubs. And they are saying, how can they pay rent? How can they survive when they're not allowed to open because of the restrictions in place? So, we'll be keeping an eye on that and whether they do get that support that they're asking for.
Absolutely. And of course, more data is expected to be released later today. And I'm sure you'll bring us up to speed with those.
Will do. Thanks, Jimmy.
And back here, we have Temple for the details of the market. Temple,
Yes.
well, that's the last trading day for the week.
True, it's the last trading day of the week, and folks are saying that we are likely to see the trend of bullish sentiment that we've been seeing since Tuesday to run through the end of the week. And then next week, we'll see some kind of chance for profits taken in the market. So positive signs, a trend gains was what we got yesterday, up some 0.13%, and that contributed more to the equity capitalization of the stock exchange. Look at the activity level. It was a decline in terms of the volume of transactions. We got Transcorp that was down by more than 1% yesterday as the major contributor. Value of transaction was positive, but the deals wasn't so good. Now look at the banking stocks. They're quite positive as well, because investors continue to be hopeful on the tier 1 names in the market. Ditto for the consumer goods space, and of course industrial goods helped by chaotics. Then insurance space, we saw some profits taken there yesterday. Nothing to show for on the energy stocks here on this side. Now, if you look at the NASD OTC, it was negative yesterday due to profits taken as well, in spite of the fact that we had more activities yesterday, only 18 deals in total. And of course, Afriland, Wamco, all of the major names that you can imagine played out here yesterday in terms of the 134 deals that we had in the market, 134,000 deals rather. Now, look at the debt side of the market. Yesterday, bonds was a little bit bearish. We had 45 deals, 21 billion naira worth of transactions was what we saw. And of course, the NTB space got a bit of a bearish sentiment as well, because folks checked out the shorter end of the curve and was able to take some profits, 2.3 billion naira worth of transactions as a result of the retail trading that we've seen there. Now, OMO is this particular one. We have some 13 billion naira on this space. We have Bankole Odison here, head for FX fixed income rather at UBA. Bankole, if you could just tell us quickly in less than 30 seconds what the next week actually holds for us, given the liquidity that we've seen in the market this period.
Okay, thank you, Temple. Liquidity has returned to the market by way of further allocations being posted yesterday. We saw more activity on the Treasury bill secondary market side, where bills are now trading at below 3.5. There was initial resistance last week, but we saw activity as the money came in. Next week, we expect bond coupon of 2028 bond to come in about 50 billion. This would also exacerbate the demand pressure on the bond side.
Okay.
Going into the month, we expect profit taking to ease up. What you're seeing on the very side of fixed income is just profit taking. After that, the institutional investors like PFAs will come back to take these, invest in these bonds, the ones that are still on higher end of the curve.
And I know that these are some of the things that the regulators and, of course, the agencies of government have priced into the next bond auction for the month of September. Bankole Odusonya, thank you so much for sharing your thoughts with us. He is the head of FX of fixed income dealing at UBA, United Bank for Africa. Thank you so much for your time. It's back to you now, Chimeze.
Thank you, Tempo. Well, on that note, we draw the curtain on today's edition of the program and, of course, for the week. Thank you for watching. I'm Chimeze Obi Iwago.